What's up?
Hello, hello.
Hello, hello. Thank you
Uh,
for having me.
no, stoked that we could. I think this was a long time in the making, so excited that you could join us here. You're the co-founder and CEO of Centrifuge, a real-world asset tokenization platform. Uh, why should we be bullish on RWAs?
Well, I loved your tweet this morning of RWAs to save the day. I think that it's a boring topic to talk about. 4% yields aren't exactly sexy for DeFi traders, but it's a safe product to think about as you're maturing your overall allocation and your DeFi trading strategies. So, why be bullish about RWAs? They're a core building block that should come on chain, that can be a part of any portfolio and any on chain DeFi strategy. You look at someone like Athena, for instance, and they have USDE and then USDTB so that when rates start to go down in DeFi, they can swap into T-bills. So something like that is a perfect example of a very real utility for RWAs on chain right now, where we can imagine a world where there's never a yield product that goes lower than the T-bill rate or the AAA CLO rate, and that it can just atomically swap in as there's volatility so that the floor yield in DeFi is 4 or 5%. So something like that I think is very interesting for today's traders and the existing behavior of on-chain capital. And then in the long term, there's trillions of dollars of assets, and there's folks like Larry Fink with the microphone at BlackRock saying, we're not moving fast enough. Everything is going to be tokenized. So there's a very, very ripe opportunity to start bringing the capital markets infrastructure on chain and really merging the two worlds of on chain and off chain. So it's just better technology, better access to products, and more users who are interacting with DeFi primitives every single day.
Can you just put a finer point on what real world assets are in the centrifuge concept? I think people have a pretty broad view on gold or commodities on chain or a version of real world assets. But I think you guys, the real world assets in your context are different, right?
Yeah, there's so many types of real world assets, from Pokemon cards to, I think someone was tokenizing the airspace above major
Right.
sports arenas in Los Angeles. So for us, we've always been focused on financial products, and what that means is that over the years, we were founded in 2017. We started with a thesis on supply chain finance and invoice receivables and some long tail credit assets that are hard to access in traditional markets. So proving out this thesis where we can bring new capital on chain by bringing high quality products on chain in a way that makes them more globally accessible. Over the years, our product has evolved. So we've done quite a bit on the long tail esoteric side with music royalties, with IP, with carbon credits. We did a large deal with Block Tower, which really put us on the map in late 2022, which was private credit, where they actually built an on-chain credit fund where they were building the securitizations, creating the CLOs, doing everything on chain from day one to prove the hypothesis that this process can become more faster, cheaper, more efficient with blockchain. Where we're at now is that we're really focused on the fixed income side. So our two flagship products are T-bills. We have about 400 million AUM in our tokenized treasury product. And then AAA rated CLOs, where we have about 1.1 billion AUM. Those are both managed by a strong asset management partner, Janus Henderson. They're about $450 billion asset manager that comes in as a sub-advisor. So they do all the off-chain buying, selling, managing of the assets. We do all the on-chain structuring, reporting, transparency, integration into DeFi. We've also expanded up the curve. So we have a product with Apollo on private credit, and then we have a product with S&P for the S&P 500. And we have a number of other products that we're announcing as well. But for the most part, we're focused more on the structured financial products as it relates to the RWA space.
So I think the vibe out here is that the trenches and crypto Twitter is down bad, yet the institutions have never been more bullish. And I'm curious where that bullishness is coming from, because there's part of me that sees the an RWA opportunity being enabling institutions to get access to the types of assets that maybe they couldn't before. And then there's the other side, which is bringing, I guess, institutional assets to retail. Is that the right way to sort of think about the opportunity? And I'm curious where the most energy is today.
Yeah, that's the right way to think about the opportunity. The most energy today is that these asset managers are interested in tokenizing their funds. The why now is a combination of things. So it's regulatory clarity and a comfort level that's coming out of the US primarily, but also all of these other large asset managers like BlackRock, like Janus Henderson, like Apollo, who are very public about their work. So that removes a lot of the reputational risk and creates some of the FOMO of, oh shit, we have to build now or else we might miss this boat. So there's the institutional adoption that's really
What is
taking
the boat
place.
that they feel like they're missing there, though? I'm curious, like, what is like is it novelty, or is there some real big unlock that these folks are seeing?
There's two things. So right now it's raising capital from on-chain capital sources. So Janus Henderson, their flagship 40 Act fund is 25 billion. They raised $1 billion from this new liquidity source. So they see there being this like ripe opportunity to create access to new capital to invest in these funds. In the short term, it's very real benefits, like 24/7 trading. So when you look at a lot of the equities that are being traded, they're you see it coming from Nasdaq, you see it coming from DTCC. So it's not just any more on-chain folks that are shouting about this. It's a broader recognition that 8 to like 5 days a week doesn't work anymore. It has to be 24/7. It has to be all the time. So there's these real benefits that are starting to prove out in a lot of these existing processes that we have. And then there's the longer term vision, which is that tokenization will shave costs out of the process. So it will be easier and faster and better to run these funds on chain. So there's this incrementality where right now it's okay, let's fund the innovation project by raising on-chain capital. Let's start to reap some of these immediate benefits, which is borderless access and 24/7 trading and instant settlement and some of these proven points that are already in play. And then let's build for the longer term. So that gives coverage to actually start testing and iterating and evolving in some of these processes.
So
And then there's like cool new stuff. So then there's, let's take this and use it as collateral and DeFi and borrow against it and start to look at, we don't really like talking about looping right now, but like start to look at more conservative looping strategies where it's a, highly liquid CLO in a very understood market that's powering the core collateral base case. So then there becomes quite an easy on-ramp to starting to do more on-chain than you can do in traditional finance.
who are the core buyers of these today? So the $1 billion of on-chain capital you mentioned, are those like global crypto native institutions that maybe didn't have access to these before, or are these people that had access but are just excited about the kind of downstream on-chain opportunities and would prefer to own them on-chain?
It's a combination of both. So right now, most of the large buyers are still institutional. And what we see, it falls into a couple buckets. So it's stable coins, and this was really led by Maker, now Sky. They've been an early pioneer in understanding that they can manage their reserves with RWAs. And they, for instance, want everything to be on chain. So they don't have a bank account. They're a DAO. They can't buy treasuries in traditional channels. So that's why they really led the market with an RFP where they're saying, I want everything to be tokenized and I want to build on chain from day one. So stablecoins is a primary buying category. You also see yield products and structured products where they want to bring in a variety of different yields and they want RWAs to provide that base layer. And then you see DAO treasuries and foundations who have a ton of capital, and it's either sitting in very correlated and volatile crypto assets, or it's sitting in stablecoins where they're earning no yield. So there's become this maturity and sophistication from treasury managers where they recognize that they should park idle cash in T-bills or AAA CLOs and earn yield from a portion of their portfolio that's stable and that's predictable.
Okay, maybe last question before we let you go here. 2017 to 2025, it's quite the run. And I'm just curious, like what has your experience been specifically of the last couple years? Because it feels like, I mean, I got into the industry in 2017, and I think for folks who maybe have gotten in more recent eras, there was this big question of whether or not this was going to exist at all, whether it was going to be regulated away. And now here we are sitting on the, we have a Genius Act, we have other legislation coming through the US, with a change in regulatory environment and vibes in a big way. Just curious on your experience going from 17 to 2025.
Yeah, I can't claim to have been here the whole time. The incredible founding team of Centrifuge were very, very early, and it was very, very thankless for a long time. I joined in early 2023, so post Block Tower deal, deep bear market, which is the
New
best
blood.
time. Yeah, new blood, which is the best time for RWA projects and bear markets. And then we made quite a lot of changes. So I joined as chief marketing officer, moved into the CEO role early this year. We brought in a few TradFi folks. So our chief strategy officer is from Cantor Fitzgerald. Our chief operations officer is from Goldman Sachs. So restructured the team to focus on growth and adoption. The work that the original founding team did laid this incredible foundation for tech and infrastructure. And now the work that we have ahead is how do we actually drive broader adoption for these products.
Amazing.
And just to say, it is a sad place on Twitter, but it's a very happy place on LinkedIn. So if anyone wants any positive,
I can't do that. I just can't do that.
No,
I
dude,
know,
Josh, I'm gonna do it. I'm gonna do it.
If you need that dopamine hit, it's very positive.
Crypto LinkedIn. How do I even find crypto LinkedIn?
No. I was talking to somebody who does growth over on LinkedIn, and you just kind of get the sense that they're going, the algo's coming over there and distribution's happening over there. And I can imagine, I don't know, I think my LinkedIn Think Boy era is ahead of me here, Josh. So this is, I wasn't expecting to get more pilled on LinkedIn today, but.
I know. I need to go there sometimes. I do it just to remind myself sometimes.
All right. Well, okay. I'll find you, follow you, and then maybe we can make sure that this interview gets up over there, and we can pull Josh over just purely on the dopamine alone.
Love it. Well, thanks so much for having me, guys.
Thanks for coming, and yeah, best of luck as you go dance with the institutions.
Awesome. Love it. Bye-bye.
Peace.